from where you sit. Thank you for joining us for another exciting episode of The Trading Bell. We're coming to you from Upper Hill here in Nairobi. And we have a very interesting guest today. We'll be speaking to Andrew Chimphondah, who is the CEO of Shelter Afrique. And really, who is Andrew? Let's take a look at his profile. Andrew Chimphondah is the Managing Director and Chief Executive Officer at Shelter Afrique. Chimphondah, a Zimbabwean national, is a chartered accountant and member of both the South African Institute of Chartered Accountants and the Institute of Chartered Accountants of Zimbabwe. He holds a Master of Business in Administration, majoring in International Finance from Durham University Business School in the United Kingdom. He is currently completing his PhD thesis on innovative housing finance solutions for the affordable housing market with the Da Vinci Institute in South Africa. Chimphondah has more than 20 years experience in finance, business executive leadership, experience in real estate, finance, retail and wholesale banking. He joins Shelter Afrique from Housing Investment Partners Limited, where he served as the Group Chief Executive. He has also worked as the Managing Executive for National Housing Finance Corporation, which is the largest development financial institution in Southern Africa. He has also served as a director and managing executive levels, focusing on home loans at ABSA and the Standard Chartered Bank in South Africa. Thank you so much, Andrew, for making time for us.
Yes, Andrew, yes.
I don't know, in your language, do you say bonjour?
Bonjour, we'll understand it's French, yes. My language, I guess you'll say Magadi Genu. That might be a bit of a mouthful for you right now, but yeah, sure.
All right. Such an honor to have you on the program. First time we are featuring a CEO from Shelter Afrique. And it's a big deal for us. And of course, your name speaks it all, the man with the strategy.
Oui, yes, yes.
And just to kick off this interview, just walk us through. Shelter Afrique has had a turbulent 2 years that did see a lot of projects being put on the ice. And from where you sit, what progress are we seeing so far from the brand?
Okay, well, thank you very much. And thank you for having me as well. I appreciate that. Well, Shelter Afrique was close to new business for 2 years. Of course, that's problematic because if you're in the business of financing, you have the result of your loan book, kind of reducing. If we looked at our 2018 results, our loan book reduced by 33%. Our revenues, also interest revenues, reduced by about 19%. So that's been a bad time. But however, there was a reason why we needed to take stock, reorganize, and then come back to the market. And that's what we've done now. We've come back to the market. We've got an important and a critical strategy to roll out. And I'm happy to be able to have that opportunity to share that with you.
All right. 33% of the loan book is not pocket change.
Yeah.
If you were to do the extrapolation for us, how much is this worth?
Well, that would be worth, our loan book was, 250 million in US dollar terms. Then it's reduced by the 30%, so the 33%. But I think having said that, it was because we were not doing any new business for 2 years, and then we were having our clients pay back their loans.
Yes.
So then the loan book was declining. But I think it's something which we find is something of the past now. And we want to be back in business with the exciting strategy to actually start to create a bit more relevance in terms of what our purpose and our vision is.
Interesting. And let's talk about the present. We're done with the past. But Andrew, Kenya is at the cusp of taking on a very ambitious agenda, that is the Big Four. And one of the key pillars of the Big Four is the housing component. And of course, it seems to be a big task for the government looking at across Africa. Governments are not supposed to be in business. They're supposed to give you a facilitative environment.
Yes.
Private sector has also been on the chopping board. They are being told they don't have capacity. I don't know. What is your feeling about this? Can the private sector play a part in the Big Four, especially to build 500,000 housing units per year?
Yes. Look, I do believe that private sector can and must play a part, because the housing problem also invariably affects the private sector, because the employees cannot be staying in informal settlements or slums. They must be housed. Yeah. That's a right for the employees of the private sector. But talking about the Big Four for Kenya, I wanted to explain that, of course, Shelter Afrique is owned by 44 countries, and we are happy to be hosted by the Kenyan government. But if we zero in on the Big Four, we are very, very close to the Big Four agenda as it relates to housing. We believe that those targets are achievable, but with collaboration. So we as Shelter Afrique actually have developed, in line with the Big Four, a private-public partnership product, which allows us to be able to support developments that are built at scale, more than 1,000 units, and we provide technical assistance. We also provide funding assistance so that we deal with the supply side of housing. Because in terms of our research, there's a shortage of 3 million houses in Kenya alone. But if you look at the mortgages on the market, you only have 24,000 mortgages. There's a problem there.
I agree. Yeah. Out of this 24,000, it's quite gobsmacking, if you ask me.
Yes.
We only have 7% of it being people in formal employment. Yes. The rest are houses that people have built by themselves.
Yes, that is correct. So that is a crisis, according to Shelter Afrique. And what we've done is we've looked and we said, how do we assist the demand side? So with the initiative from the government of the Kenya Mortgage Refinance Company, the purpose is clear. They are lending money to lenders. These are the commercial banks. Why? So that they can de-risk their housing portfolios and allow them to go deeper in terms of access to housing, and also improve the affordability of the houses, because those commercial banks now can provide longer tenures and also lower interest rates, and the intention is to increase affordability. So we as Shelter Afrique have actually gone ahead and invested into equity into Kenya Mortgage Refinance Company of $2 million US, which has also leveraged another 28 million US, because we believe in Kenya, and most importantly, we believe in adding value in housing.
There's that big conversation as well, Andrew, around accountability. It's one thing to have people deducted this fund. It's another thing for the fund to be used for its genuine purpose. And you and I know pretty well that African governments are struggling with issues of governance and corruption.
Yes.
Not just in Kenya. Look at West Africa.
True.
It's a widespread pandemic, if you ask me.
Yes.
So what are the guarantees, really, if you look at that young man who is being deducted and he knows or she knows that this fund is not secure? If you look at the penalties that people are going to pay in the event that this money is squandered, it's just 10,000 shillings. That's about $100.
Yes. Look, I think across Africa, governance, graft, those are always issues or problems. But you have to look at now the leadership. And you find that the President, Uhuru Kenyatta, has come out in the open for a zero tolerance towards any corruptive behavior. I think that is positive. That's a start. You look at your neighboring countries like Rwanda, the same. Those things can be resolved. We cannot build houses or come up with initiatives because we are scared that people, might be involved in corruptive activities. It's an attitude change, yes, that is required. And what we see is there is a political will, and I think when I look at what I've seen, especially on the fund side, even though employers and employees have not started contributing the 3% that generates the 56 billion per annum estimated, what we are seeing is, if you look at the interest from the potential beneficiaries, the Boma Yangu website, from the housing department, they didn't even launch formally the website, but already they've got 200,000 interested parties. That tells you that there's going to be offtake. That tells you that there's a serious demand. So yes, when it comes to corruption, there are government agencies, like any organization, that their job is to provide that oversight. Like in a company, we have internal auditors, we've got external auditors, but it doesn't mean we don't do business because there's no trust. We have to continue to do business and follow up on our mandate to execute and ensure that, we reduce the shortage of housing to the extent that we can, given the opportunities that we have.
And Andrew, as we near the tail end of this interview, of course, as Shelter Afrique, you're doing a splendid job when it comes to capacitating governments and institutions. And just walk us through the pipeline of projects you're looking at this year, over and above what you've already indicated around the affordable housing. Are there any other projects that are coming up soon?
Yes. Okay, so it's very important that I also point out the fact that not many developers can actually develop at scale 1,000 units and above. So what is important for us was to capacitate those developers. In doing that, what we've done is we've actually created a Shelter Afrique Center of Excellence to show that we are adding value. We've invited the contractors to a masterclass, contractors, developers, which will take place for 2 days next week, to give them training on public-private partnership, to create capacity building material for free, because we want to add value. Why? Because at the end of the day, those are the same developers that need to support the Big Four agenda, and capacitating them is very, very critical. So when we now talk to projects, we've already launched 2 big projects, Richland Ponte. We launched that a couple of weeks ago. Before then, we also launched a project with Caribou Homes. And we're not remaining there. As you know, we've been very heavily involved with Everest Park. It had a bit of negative publicity, but we've finished the final phase. We've rectified the problems that were there in the past, and we're happy to announce that people can start moving in and taking up occupation of their houses in Everest Park. But we cannot only just be in Kenya, because we are owned by 44 countries. So we've signed an MOU with the Central African Republic. It's a country which, as you know, was affected by the war.
Sure. But
we've signed an MOU to do 1,000 houses there. What's interesting there is the average cost of a house there is very high, $40,000 US dollars, but only 3% of the population can afford. So we're going to go in there with different products, maybe housing, incremental microfinance type of product, to meet the requirements of that market. At the end of the month, well, actually in May, we already concluded a public-private partnership in Rwanda with the Development Bank of Rwanda. But in any case, this will allow us to build 3,000 houses using exciting alternative building methods at a very low cost, because our idea is to try to drive the cost down. So in essence, there are other projects we have across the landscape of Africa, but our focus now is to make sure that we support the Big Four agenda. As a developmental financial institution, we look at where are the market failures, and we close that gap. And we're excited that you have a government that is raising the profile of housing as a critical and important initiative that needs to be resolved. So we want to support that, and I've been very impressed by the proactiveness of the government in Kenya, and particularly the Department of Housing.
All right. Seems like your job is well cut out.
Well, yes, it is. But I have to say that I think at the end of the day, like we emphasized before, it's all about collaboration. It's all about a strong, political will to make sure that we do resolve the shortages in terms of housing. For us, our vision is clear: decent, affordable housing for all in Africa, because it is their right. Our mission is clear. We believe and we want to be the preeminent provider of advisory, financial, and research solutions geared at resolving the severe need for housing in Africa. And how are we going to do that? It's through ensuring that we create public-private partnerships that enable us to achieve, sustainable developmental impact. It sounds like a mouthful, but I think the point we're trying to stress here is it is a crisis, and with a crisis, you have to allocate resources, and we are looking at allocating no less than $1 billion, $1 billion US dollars in the strategic cycle of our strategic plan to try to at least make a positive difference in the housing landscape. $1 billion is not a lot in housing terms, but however, it's a start.
All right.
Yeah.
All right. Quite ambitious plans you have there, Andrew.
Sure.
And what would be your parting shot really to the market? Right now, there's been that lull with Shelter Afrique, and of course, investor sentiment had waned off on this particular institution. But really, what are your assurances to the market?
No, thank you for that important question. Well, I think what's important to the market is, you see, our customers are the developers. Our customers are the banks. The message is very clear. Shelter Afrique is open for business to those who want to take advantage of the products of Shelter Afrique. Shelter Afrique is and will always be unique because it gets its funding from the member states. So when it comes to credit lines for banks so that they can on-lend to do mortgages, our pricing is competitive, our tenure is competitive. We can even lend up to 10 to 15 years. Other normal banks cannot do that. When it comes to supporting developers, because we're a developmental financial institution, when we go into public-private partnerships, we can take up equity, we can take up mezzanine or junior debt, we can take risk, which other banks will not be able to do. So we are there to make sure that we resolve any market failures, and we would like to encourage those developers, those that want to develop at scale, those that have got public-private partnerships in the brewing, to say, come to us if you need technical expertise on either raising finance, managing the projects, or just getting funding for that matter, because our funding has a catalytic purpose and role. And on our backs are bigger global developmental financial institutions that are willing to come and partner and syndicate loans and share risk with Shelter Afrique. So we are only as good as those parties that want to take use of this unique advantage and these benefits as well.
All right. In less than 30 seconds, Andrew, are there any collaborations with the Nairobi Securities Exchange that you are considering?
Well, it's a very good question. We will be considering that. I think our focus right now is finalizing our debt restructure agreement, which we've reached final stages with our 8 lenders, of which we've got 6 developmental financial institutions. And then once we've done that, the intention now is to go to market to raise through the Capital Markets Authority, be it additional bonds or capital, to be able to support the debt or capital required to fund our ambitious growth in terms of housing finance.
All right. Thank you, Andrew.
Okay, my brother.
Such a pleasure having you on the program.
No, it's such a pleasure being here. Thank you so much, and thank you to your viewers.
All right.
I really appreciate it.
I'll be holding you to account to see whether the units will be built.
Well, I think you should, because exactly that's what we're here for.
All right.
So yeah, so let's see. I think let's have the same discussion a year from now. Then you can ask, what units have we built?
Shelter Afrique, ready for business.
Amen. Thank you very much.
All right. We've been speaking there to Andrew Chimphondah, who is the CEO of Shelter Afrique, just breaking it down for us in terms of where the housing agenda ought to be. And they are quite optimistic that things will be picking up in this particular financial year. Well, that's all the time we had for here on the Trading Bell. Time for us to take a look at markets analysis for this week.
If you look at all the movers, they are all releasing results very soon. Safaricom will be releasing full year 19 results next week, Friday. So the movement we are seeing is investors looking to take positions before the results come in.
Well, that signifies the end of trading for today on the markets. Time for us to take a look at markets analysis for this week. And we're joined by Patrick Momo, a research analyst at Genghis Capital. Thank you for joining us.
Thank you for having me.
Patrick, I'm seeing some interesting moves, especially with the NSE 20 share index. The stock has, the index has not been performing pretty well for the last few weeks. This week it's shed off 0.42% and it's standing at 2,858. If you compare this with last week, Momo, we are seeing it was at 2,870. Perhaps from an investor's standpoint, is this a good place for the markets or it's too early to make a call?
It's an attractive entry point given that the valuations are cheap. If you notice movement, it's a decline, but it's a really marginal decline. And most investors are taking a wait-and-see approach in the market. So while there might be a decline, the decline might primarily be attributable to movement in market, maybe due to liquidity needs, not necessarily investors coming into the market to trade actively.
And quite interesting, but where the NSE 20 is this week, Momo, it sort of gives us a deeper sense of what should we expect now that we are through with the results season. Investors have taken their positions. They know which stocks to buy, which stocks to avoid. What is your hunch?
So we are, despite the results, we're even entering into a new results season for Q1 for banks.
Yes.
In fact, next week we also have other entities releasing, like Safaricom, for example.
Sure.
So what you have witnessed following the full year results, investors have not been quite active in the market. They have not really taken positions in the market despite the release of full year results. And again, this might probably be attributable to one, the foreign investors not coming back, and the local investors also taking a wait-and-see approach because the market might also has room to move downwards.
All right.
Yeah.
Away from the index, Momo, let's look at top movers. This week I'm seeing Safaricom has moved 14 million shares, followed there by Equity Bank moving 4 million shares, Cooperative Bank, KCB also around 2 million each. But what strikes you about the movers for this week?
So if you look at all the movers, they are all releasing results very soon. Safaricom will be releasing full year 19 results next week, Friday. So the movement we are seeing is investors looking to take positions before the results come in.
All right.
Depending on how the results are, we might see increased dividend on the counter, and that will prompt investors to buy into the stock afterwards.
Should we expect any surprises from Safaricom now that we've seen the uptake of Fuliza?
The company has been growing relatively rapidly over the last year or so, and especially through Fuliza, the uptake has been quite big, and also the income they are earning from the Fuliza, from the sort of loans they are issuing. We expect results to be quite favorable for the company, and this might also translate into an increased dividend.
All right.
Yeah.
So it's a stock worth watching out for.
Definitely.
Let's take a deep dive into the top gainers this week, Momo. I'm seeing National Bank. The stock has moved up 12.95%. And of course, everyone knows that National Bank has not been performing very well. And of course, there's that share acquisition by Kenya Commercial Bank that Oigara, the CEO for KCB, says it will make KCB the 1 trillion book bank in the region.
Yeah, so this is a really strategic merger from KCB. As you can see in the market, investors already started reacting to it. However, we feel that the reaction by investors, especially on the National Bank counter, is premature because you'd expect KCB and National Bank to trade at a ratio of 10:1, which is the implied ratio for the takeover. However, you see NBK is currently trading at a premium to KCB, meaning an investor should be indifferent between buying or rather trading NBK at 4.5 shillings and KCB at 45 shillings. Currently, KCB is trading at 45 shillings, but NBK is trading at 5 shillings. So there's that premium which investors have added on NBK, which is not warranted. So an arbitrage opportunity exists there for any investor looking to sell off NBK and buy KCB shares, though it's important to note that the volume also is quite low.
So is this a strategic merger for KCB from where you sit?
Yes, definitely.
What do they stand to gain?
If you look at some of the branches, for example, NBK has some in very strategic places in the country, JKIA, at the port, Wilson, very strategic entry points. They have accounts, specifically KRA, the Teacher Service Commission, they operate such accounts, and SSF government will also be consolidating their position in the bank. So overall, NBK has something to offer on the table. The deposit, or rather the deposits they add, or the total asset base they're adding is 115 billion. That's sizable. The only concerns with NBK will be the corporate governance and how it has been run in the past, and these have translated to issues such as a really high non-performing loan book of around 47%, a cost-to-income ratio of 92. So these are the primary concerns surrounding NBK. Otherwise, when you look at other aspects of the business, NBK will offer a very strategic entry point for KCB shareholders.
All right. And as they say, looks can be deceiving. Of course, Momo, it's too early to make a call, especially when it comes to NIC as well and CBA. But Momo, thank you so much for your compact, refined and very deep insights.
No, thank you.
We appreciate your time. Well, let's look at how the markets have been performing this week. Time for us to take a look at Markets 101 for this week. Well, it's time now for my favorite segment of the show, that is Question on the Street. And this week's question is from Valiant Violet, asking on Twitter, I'm just wondering, what makes a company get delisted? Well, Momo, what are the answers for this question?
Thank you for the question. A company gets delisted from the exchange when a number of, or one of certain requirements are met. One is the company ceases operations. Two, if the company is merged such that the old entity ceases to exist. Three, if the company declares bankruptcy. Four, if the shareholders through a resolution opt to remove the company from the public space. And five, if the company ceases to meet some of the listing requirements.
Wow, I'm seeing so many questions already, but that's all the time we had for our question on the street. We now want to take you down memory lane, where we look at historical fact for this week. Well, thank you so much for your valid company. It's time for us to bring the show to a close for this week. And of course, remember, you can always engage with us on our social media platforms appearing at the bottom of your screen. And remember as well to keep it locked on KT News for another exciting episode of The Trading Bell. Well, from me and Momo, we say have a lovely weekend ahead. And of course, take care and keep warm in this very cold weather.